It's an absolutely amazing feeling now that I've finally got my foundational properties underneath my belt. I can start to see the pieces of the puzzle coming together for my long-term strategy. So today's video, I wanted to give you a bit of an update on my portfolio, what my plans are over the next couple of years, and how this is all going to link to my longer-term plan. It's been a huge 1.5, 2 years for myself now with budgeting, saving, planning, buying, renovating. Everything that's been happening has been so crazy, super overwhelming at parts, feeling really proud at other times, feeling shit scared at other points throughout the process. But it's really nice to start to see the forest through the trees and understand how all of this is going to come together. When I first started putting together my plan, I always knew exactly what I needed to do to get to a base level of financial independence in the future, which for what I'm working towards, it's about $80,000 to $100,000 worth of passive income within the next 7 years. So I know this is going to require a lot of sacrifice. I know it's going to require a lot of hard work, but now that I'm past the foundational phase, I can already start to see the forest through the trees and see how it's all coming together. So at the beginning of 2019, I bought my first house in Brisbane. It's in a really high quality area. It was a really rundown house, but that was always my plan because I wanted something that I could manufacture some value to. So I picked this one up about 25 k's from the Brisbane CBD in an awesome area for about $380,000. I ended up renting that one out for about $380 per week to an absolute legend who's been in there for the last 1.5 years now, and haven't heard a peep out of him. It's been an absolute blessing in disguise. So that was the first property. Then at the start of 2020, this year, I ended up getting my second property down in Brisbane, following the exact same plan, the exact same strategy. I wanted to get a low quality house in a high quality area. So basically I was following the strategy, getting the worst house on the best street. So I picked this one up start of 2020 for $370,000. Nice big 600 square meter piece of land, a 3-bed, 2-bathroom house within a couple of k's from the beach. Rundown house, but I was able to rent that one out. So I actually rented that one out for $370 per week. So both my properties are sort of yielding at about 5% at the moment, which means they cover their costs in terms of the mortgage, but then I have to chip in a little bit of money when it comes to the insurance, the rates, the maintenance. So both of these properties end up being around $4,000 negative per year, which is something that I've been willing to swallow. It's been an easy portfolio to hold. It hasn't necessarily cost me too much financially. They've basically been looking after themselves, and to be honest, there hasn't been many headaches there. In 2020 for the second property, beautiful pink house that I bought, I ended up renting it out to some great tenants, but when the coronavirus hit, they just stopped paying me rent. It was a little bit nerve-wracking. I was a little bit scared because I wasn't sure what was going on. I wasn't sure why they were paying. They weren't talking, they weren't communicating with me. Lo and behold, it all ended up working out. I've ended up getting all of the money back that they owed. So I stayed even when you think about the time that I've held the property, and it all worked out in the end. One thing that really kept me a lot sane there, a lot saner, was having a bit of a buffer in place. So even though I've been super aggressive purchasing these properties, I've still been conservative, having a $5,000 budget against each property, which may not seem like a lot to a lot of you, but I knew that was going to cover all of the costs for the property for about a year. So I had that $5,000 buffer there, which was fine to cover the mortgage, to cover everything that I needed to from that property. And then I worked out a payment plan with the tenants once they got back into some work and could actually afford to pay the rent. And it all ended up working out in the end. But having that buffer there definitely helped. So they were my two foundational properties, which I always planned to convert them into dual occupancy houses. So that's exactly what I'm working toward at the moment. Now that I've got those two foundations, I'm going to convert them into dual occupancy houses. But what also happened this year was obviously a crazy year. We saw a lot of people, a lot of uncertainty in the market, a lot of fear in the market. Things were lining up pretty much exactly with Phil Anderson's 18.6-year property cycle, where he was predicting that 2020 was going to be a recession year, it was going to be a down year, and there was going to be some negative sentiment, which is exactly what happened. So I was actually planning to go on a 6-week holiday over to Central America. So I've been saving away for that with my partner, and then boom, March comes. No sir, you're not traveling anymore this year. And as things started to work out, we're like, well, you know, we've got a decent amount of savings there. We're ready to kind of move into our own home up here on the Sunshine Coast, which was always going to be the third piece of the puzzle that was going to come together. The first house in Brisbane, the second house in Brisbane, then the third house was always going to be my own home on the Sunshine Coast. So then as soon as this coronavirus hit, I was like, I need to take advantage. I need to take control of my situation. I need to take control of this opportunity that's in front of me. So we weren't really ready to buy a house, myself and my partner, but we worked through finance with our broker, and he said, look, you're good to go. It's going to be tight, but you do have the potential to go for something. So we started reviewing the market up here on the Sunshine Coast, always keeping my investment cap on and not sacrificing on certain things. So I wanted to be close enough to the beach so I could ride my bike down to the beach. I wanted to be on a nice big piece of land. I wanted to be in a quality street. I wanted to be in a nice, good quality area surrounded by solid amenities. So shopping centers, schools, public transport options. So I focused on that. Now, we went to a few open for inspections, ended up finding an off-market opportunity whilst at an open for inspection. We ended up getting through the property and securing that one under contract at $555,000, which was an amazing result. We thought we got that at about $20,000 to $30,000 under market value at that point in time. So we're like, what a win. So we worked through the motions with a mortgage broker and ended up falling over on finance, which was gut-wrenching. I was so upset. I was so embarrassed. I was so nervous that I couldn't get it together. I ended up reaching out to another mortgage broker who's an ex-client of ours, and thank you so much, Paul. You really pulled a rabbit out of the hat for it. So we ended up getting the property back under contract. We did it, set it up in a little bit of a different way. I ended up having to pay an extra $5,000 for the property to keep it all together. So I ended up getting it under contract to $560,000, and since then we've actually settled on the property and moved in. So it ended up being about 1.5 kilometers from the beach. It's a 4-bed, 1-bathroom, low-set brick and tile home on a massive 990 square meter piece of land. So I love this opportunity because it gave me some opportunities for renovations. It gave me some opportunities with development potential in the future, being such a big piece of land. It ticked all of the location boxes. It's just around the corner from one of the best primary schools on the Sunshine Coast, which my partner loves, even though we don't have any kids yet. But it all ended up working out in the end. We ended up moving into the property, doing about a $20,000 renovation, replacing the flooring, opening up a few walls, painting throughout, changing a few of the light fittings, just modernizing it a bit and doing a bit of work in the yard. So we can now really move in and feel house proud and feel really excited. So now it'd been a year and a half, 18 months, and I'd got 3 properties under contract. Now I'm holding 3 mortgages. I've got 2 income producing assets, but as a 28-year-old, it's a lot of pressure. And I've been feeling it, you know, like it doesn't get easy purchasing properties, but I have a plan, a very clear plan that I know I need to follow in order to achieve financial freedom. And guess what, folks? Financial freedom didn't come easy for anybody. It does require work, it does require sacrifice, and it does require you making some real tough decisions. And I've felt this, and there's been up days, there's been down days, but you just got to roll with the punches and follow the plan. So now I've got these 3 properties. I've started to kind of think about, okay, well, what do I want to do? How can I maximize the potential of these opportunities? So first things first, I'm working on getting another savings deposit together to knock down one of my houses and rebuild a brand new dual lock. So I'm currently working through finance on that one at the moment. Funnily enough, it's not actually going to cost me too much money. There are a lot of opportunities out there at the moment, and because the interest rates are at historic lows right now, the banks are open for business and there's some good opportunities out there. So I've worked out with my mortgage broker what's going to be the most affordable property in my portfolio to knock down and rebuild, which ended up being the second one because it's got the lowest LVR in the portfolio and it's going to cost me the least amount of money to knock it down. So I'm currently working on getting some quotes on knocking down the house, which I'm expecting to come in at around $20,000. I've been working with a building company as well on some preliminary plans and designs to build a really high quality, solid 4-bedroom, 2-bathroom, plus another 2-bedroom, 1-bathroom granny flat, all under the same roof line. Now, what I'm thinking here is I want to plan for 10 years, 15 years, 20 years down the line, and what's the suburb going to look like? What types of demographics are going to be in the area? And how can I maximize the value potential and rental return? So I've decided to go for a high set, and I'm actually going to be spending about $380,000 on the build. So significantly more than what most people would feel comfortable spending on a new build, especially for an investment. But because this is one of my foundations that I'm going to hand over to my kids when I pass away in hopefully 70 years from now, maybe longer, I'm going to hand over to my kids, and I don't want the maintenance issues. I don't want any of the ongoing issues. I want to maximize my potential for tax depreciation benefits. So I'm keeping all of these things in mind. So I'm currently working through that at the moment. I'm hoping to be in a position by late 2020 to knock down the house and begin the construction of the new build, which is going to take about 4 months to build that house. So I'm going to be rent free, or not receiving any rent from that particular house over that period of time. But once I finish it, I'm going to have a brand new home. Now I'm expecting the 4-bed, 2-bathroom side to rent out for about $550 per week. And I'm planning for the 2-bed, 1-bathroom side to rent out for a further $300 to $320 per week. So it's going to be returning me about $850 to $900 per week of rental income, which means it's going to be significantly positive cash flow. I'm going to actually add some depreciation benefits on top of that, which I'm assuming to come in at around $15,000 per year at a build price of around that $380,000. So this is obviously going to really help. And what I'm going to find once I've completed that is my portfolio is going to be basically neutral. Because I'm getting such strong positive cash flow from the brand new house, it's going to neutralize my portfolio, which is actually going to put me in a better position than I am right now. I've also got the potential for a little bit of an equity uplift because I bought the house really well, and because I'm building a really nice home on top of it. I'm hoping that I'm going to release some instant equity from that particular property. So that's the immediate next step, which I'm hoping to be completed by March 2021. The next thing from there is to work on the next new build. So I'm going to knock down the first house that I bought and do the exact same thing that I'm doing on the one that I'm currently working through at the moment. So I'm not going to reinvent the wheel. I'm not trying to do anything different. I'm literally just following my exact plan. Then by the end of next year, I'm planning to have both houses knocked down, both new builds done, and at that point in time, my portfolio should be around $40,000 positive cash flow. So I'm already 50% of the way there to my 7-year goal. Absolutely loving life. And this is why I'm starting to feel super excited about the future, because I can see how it's all going to come into fruition. I can see exactly how this is going to work, and I'm slowly but surely working away on achieving this. So end of 2021, my plan is to have my own home up here on the Sunshine Coast and 2 properties producing me with 4 incomes down in Brisbane with about $40,000 a year worth of passive income. Following on from this, my plans from 2022 forward is to renovate the home that I'm living in at the moment. Nothing major, because I'm going to convert it into an investment longer term. So once again, I keep my investment cap on. Even though I'm living in the home and I'm emotionally attached to it, I'm not going to go do major crazy, nothing major in terms of renovations. I'm just going to upgrade the kitchen, going to upgrade the bathroom. I'm going to do some landscaping on the property and get it nice and livable and get it nice and fresh and modern, as opposed to what it is now, which is kind of like an 80s build with some new flooring and some new paint throughout. So that's my plan longer term, 2022, renovate that house. And then I'm just going to sit on that portfolio for the next 6 to 7 years to the top of the cycle, lining up with Phil Anderson's 18.6 year property cycle, which he's indicating that he believes the top is going to be around 2026 to 2027. Now, we've done some videos on that you can find on our channel. The 18.6 year property cycle explained. Ben actually recorded that video a few months ago. So if you want a little bit more information on that, jump over and check out that video as well. So 2022, gonna have my house renovated and the 2 properties, but then I've got 7 years or 6 years at this point in time to figure out how the hell am I going to pay off some of this debt. So this is where I'm going to use the skills that I've learned from buying these 3 properties and developing these 3 properties to start looking at some higher risk short-term deals. So this is where I'm going to look at high quality blue chip suburbs within about 10 k's of the Brisbane CBD, or literally within walking distance to the beaches up here on the Sunshine Coast, where I'm going to buy an unrenovated knockdown house or a really unrenovated property that's in a great location where I can buy it at really affordable prices. And then what I'm planning to do is do a really nice renovation, or once again, knock down and rebuild, then hold them for that 6-year period for one sole purpose. The only purpose from these properties that I'm going to buy from 2022 to 2026 is to buy them, add value to them, hold them, and sell. I'm going to sell as close to the top as I possibly can. And then I'm going to use the profits, the capital gains, the equity that I build up to pay off as much debt as I possibly can, so that by the time I'm at the top of the property cycle, I've got my portfolio in an amazing LVR position. I want to have lots of cash in my pocket. I want to have that $80,000 to $100,000 worth of passive income per year, so that when the next big GFC comes, I can capitalize on that. I can buy my dream home. I can buy some great properties in Sydney, Melbourne, and Brisbane, and really make the most of this of the next cycle that's coming in. So, that's basically my portfolio update. I've got the 3 properties now. I'm just slowly but surely working away, and I know it could sound like I've been doing a lot, but at the same time, it's been very strategic. I've been following my plan. I've been doing exactly what I know I need to do in order to achieve my goals. And yeah, there's been times where it's been overwhelming, but I know that I just need to come back and go, okay, well, all you got to do is focus on one thing at a time. So I've got this big plan, but then every single time I'm reverse engineering it back to, okay, well, what do I need to do next? And then solely focusing on that. Which is really exciting. I can't wait to show you the progress. I'm definitely going to do some videos soon on the 3 properties and give you guys a little bit more insight into what those look like. If you do have any comments, please leave them down below. If you haven't already, please subscribe to our YouTube channel. We've also got the Instagram page and the Facebook page, so jump over there, follow, give us a like. We're doing lots of videos all the time, giving you updates on our personal situation, talking plans, talking Australian property. So thanks so much for tuning in again, guys. I hope you've enjoyed today's video.